I want to take a look at this strategy here where what we can do is actually make money on the downturn. So we have this here where I think what would make sense, like what I would like to do is I would like to, and I've actually thought about a strategy like this for a while now, where we can own leveraged assets, something that does very well. So I'm thinking about a strategy that I think this will work very well in a market downturn. This is what I think, right? And again, not investment advice. But what I think would work well is if we own TQQQ, which is a very well-performing asset in most situations, but does not do very well on downturns, and then we add on a put spread, right? So make a strategy that owns TQQQ in most situations. Actually, no, only owns TQQQ if it's above the 200-day moving average. If we're below the 200-day moving average, or actually, no, let's do this. I'm gonna combine two of our strategies. One of my favorite strategies is owning TQQQ if we're above the 200-day moving average. I like that by itself. But what we could also do is have this thing always own a put spread, right? Some sort of put spread that's just constantly rolling and owning. Let's actually ask ChatGPT about this. So I like the idea of a put spread. Can you do a bit of research around what has historically been the best put spread to own over the past few years? Like actually research this, take your time looking through this and researching this, because this is something that's actually a bit complex. What kind of put spread should we own, and what would have historically been the best type of put spread to own over the past 10 or 20 or 30 years? Because when we own a put spread, we got to think about what expiration date we're buying, and then we got to think about what strike prices we're buying. So what would you do, right? What do you think is the best or most effective put spread for us in terms of expiration dates? Should it be a month out, expiring in a month, or expiring in 2 months, expiring in a year, or expiring in a week, and rolling weekly? How should we do that? Because I'm thinking my default thought process is we want to own something for, probably buy something that is a month out and then only hold it for a little bit of time and then roll it once every week or once every 2 weeks or something like that. That's what I would think. But what does the research actually say? And then also what strike prices, right? Like, I guess we could talk about, what level of delta and all that kind of stuff do we want to put this spread on? Okay, so it's doing a little bit of research for us here. It's great. Okay, this is good. ChatGPT is actually doing some pretty good research for us here.
So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.